Hello and welcome to Market Domination Overtime. Stocks ending the day higher, boosted by solid earnings. Our very own Jared Blickery has the latest. Jared.
Thank you, Josh. We got a lot of records, but not in the majors, but we'll go through them anyway. Here's the Dow, finishing the day up about 292 points, 0.6%. Here is the intraday price action. Pretty decent results there, but just short of a record high. Here's the NASDAQ composite up about 0.25%, was much higher earlier in the day. And the S&P 500, kind of a similar chart there, also up 0.25%. But the action, again, in the small caps. Russell 2000 adding another percent today, good for a record high. Same for the S&P 600, another small cap market, and the S&P 400, that's mid caps. And let's go down the line here. We got a few more records to talk about. That would be in the Philly Semiconductor Index, the so-called SOX, which has just been flying, and also the Dow Jones Transportation Index. That was up almost 2%. So let's get into the sector action. It was all about utilities today, followed by industrials and real estate. Then you got tech, materials, and finance all on the top row. Today we saw energy as a laggard. That was down 1%, followed by healthcare and communication services. And since small caps have been stealing the show, let's show you what the small cap sectors are looking like. We got 7 here, and only energy finished in the green. The top one, industrials, followed by finance, and then we got materials. So guess what's in materials? That's your gold and silver trade. And silver, by the way, another record high in the futures. But here's the NASDAQ 100. NVIDIA showing gains of 2.1% in the upper left. And looks like Alphabet down almost 1%. Apple and Microsoft and Tesla just slightly in the red. It was another day of semiconductor outperformance. That's what we're showing with this heat map right here. A lot of these names up 4 or 5%. That would be Taiwan Semi, ASML, Lam Research, Applied Materials, KLA up 7%, SanDisk up 5%. Software, a little bit of red there. IBM kind of leading the way down, about 3.5%. DocuSign in the same group there. And I'll send it back to you, Josh.
All right, thank you, Jared. Well, banks, one of the big winners of the day, Gabelli Funds. Mac Sykes is back with us. Mac, we fixed those technical difficulties. Hopefully you're back. That's a good thing. Got your take on Morgan Stanley there, Mac. I think you cut out before we got Goldman, so I do want to hit that because equities trading revenue, all-time Wall Street record, $4.3 billion per Bloomberg. They raised the dividend. What did you make of that report, Mac?
Oh, and just like Morgan Stanley, a solid beat. Obviously they got the provision from Apple, but equities up 600 million in the quarter sequentially, driven, prime brokerage. This is an environment where they just really do well. And then on the conference call, very, very confident CEO David Solomon. The pipeline's the strongest in 4 years, giving a robust outlook for next year, or this year rather, in terms of issuance, advisory, and MAA. So earnings power should continue with Goldman Sachs, and just a very confident outlook.
Mac, there was a good piece in the Journal today. I don't know if you caught it. I'll read you this headline. Here's what it says. It says, "It's not time to dump mega bank shares just yet. They say investors should consider what seems to be the Trump administration's broader agenda, supercharge the economy and investment activity. They say on the whole, that ought to keep banks firing on most, if not all cylinders in 2026. What do you make of that, Mac?
Well, there's some good points there. I think, one could point to some of the, premium valuations now in terms of, Goldman Sachs and trading at almost 3 times tangible book. But if you think about the outlook, this is what we all dream about. You have a steep yield curve, you have rapid growth or strong growth in GDP coming this year, deregulation, strong consumer, good confidence, and lower cost of capital because of the 75 basis points cuts over the last year. This is a lot of things are coming together. And you also have the midterms next year. So we think the first half will also be a new wave of significant IPOs. So SpaceX, Anthropic, perhaps OpenAI. So not only is there a lot of IPOs coming, but a lot of significant IPOs as well. And that will bring retail engagement. So again, this is the environment that you want to be owning the banks in.
Let me ask you back about President Trump's other idea, that cap on credit card rates. You saw those big banks kind of pushing back on that, Mac. I'm curious, what do you make of it as an analyst who covers the space?
Right. I mean, it's more complicated than simply, what he referred to as the cap there. I mean, there's a number of puts and takes around. I mean, if you just think about, historic losses of 5% and your cost of capital at least 5%, it's going to be tough to run a credit card business with a 10% cap. That being said, we heard from Bank of America this week, talking about certain programs where, they want to try to offer products to perhaps some of those credit card people that need those offerings, et cetera. So I think it's good that there's more attention to this space. We want to get some relief from for the consumer. We want to continue to drive, that 70% of the economy and make sure there's available credit as well. So I think bringing more awareness is good. I think the big banks understand that. And, I think trying to protect the consumer is also good as well.
Final question, Mac. I'm just curious about AI. How are the big banks you're covering, Mac? To what extent are they already leveraging that technology? And how do you think about what that could mean for those margins and headcount and just efficiencies going forward?
Right. So I think we're starting to get great feedback. I know there's a couple analysts that were really digging into it on the conference calls. I mean, if the most specific example was when Brian Moynihan was asked about it at Bank of America, and they used 18,000 programmers, productivity up dramatically. And so the ability to make those programmers more productive, and they saw some savings in terms of that headcount, about 2,000 people, et cetera. So we're seeing some productivity, and that, that'll reduce the costs and help with ROEs. But then they're also deploying AI for revenue generation too, in terms of customization, engagement with the clients as well. So, the big banks are, going to be big beneficiaries of AI, both on the cost and the revenue side. And so we think those, it's a good way to play the AI theme, in a lower multiple and, lower risk in terms of the businesses, because we know that there's going to be tangible results.
Mac, great to have you on the show today. Thank you.
Thank you.
Well, the Senate Banking Committee postpones its discussion of the much-awaited crypto bill known as the Digital Asset Market Clarity Act. This comes as Coinbase CEO Brian Armstrong, he pulls his support for the bill. For more on what this means for crypto, let's welcome in now Kavita Gupta, Delta Blockchain Fund founder and general partner. Kavita, always good to see you. So there was going to be this vote by the Senate Banking Committee, Kavita, advance this crypto market structure legislation, now delayed. What happened here, Kavita? What's your line of sight?
I think what Armstrong has Brian has finally said on his tweet is something which everybody in the industry has been thinking about. It's been 6 months since the Senate actually passed it to the committee, and it should have been done the way Senate has passed it, to have regulations around stable coins. Now we have IPO of Circle already in place. But what it seems like is between Democrats and Republicans, there hasn't been a very fruitful or positive towards crypto, a clarity. There are also conversations about whether the banking lobby is too strong to break through to really have a decentralization of the currency. So one of the biggest issue which I see, of course, Brian has listed a bunch of them, a lot of people in the industry talking about tokenization of equities, or whether it is about yields from stable coins, but the overall decentralization of the money. For me, one of the biggest problem I see is the yield part. How are you not going to allow stable coins to also have yield bearing assets? And I think if we stop there and move it more towards SEC, which is also something, the original bill was moving the whole industry more towards CFTC, and now we are seeing that the shift back towards SEC a little bit more heavy. I don't think that's positive for the industry. If we're going to stop having a decentralized industry, passing that yield to the consumer and keeping it as what's been happening between a regular stablecoin at Coinbase versus the yield-bearing stablecoins, we're going to have a lot of issue, and then we have to repeat after a couple of years the whole same process. So I agree with how crypto industry is feeling today, that then this is more of a lip conversation than really moving the industry in a positive way.
So is your point, Kavita, even if this legislation doesn't happen, doesn't get the green light, doesn't move forward, you believe, listen, the industry is going to be okay because end of the day, they got plenty of good friends in high places now?
I think the most important thing is blockchain industry has been moving, and some of the IPOs have already, Coinbase IPO, Circle IPO has already make it a dent in a very big way. We saw how the prices moved. It is accepted by most of the institution. Goldman Sachs CEO had to come and say, oh, they are spending a lot of time with crypto market predictions and other stuff. So by de facto, the industry has been growing. Said that, if you're going to have a regulation which on the paper say, oh, this is a clarifying act for blockchain, but at the same time, you're actually restricting us in terms of a technical growth and innovative product for the consumer, then that's really not helpful. I would definitely would love to have a clarity on KYC and AML to make sure consumers are protected. But at the cost of it, because of other lobby groups, you are saying technical products cannot be innovative and we move forward, then I'll rather stay in the de facto world.
Let me ask you why I got you here. Kavita, Bitcoin, I'm just looking at, okay, we're back at 95. What is driving that, Kavita? And I'm curious where you see that headed near to intermediate term. What are some of the potential catalysts ahead?
I think if we look at the market, Josh, like Bitcoin went up and down, but held itself very strong. So did ETH. ETH went down to 24, 26, went up, moving between 29 to 32. Same thing with Solana. I feel like overall the market is ready. It was expecting some really positive direction, especially it would have happened today with respect to the regulation. But at the same time, the liquidity in the market, once we come back from the holiday season, is positive. And I feel like Bitcoin crossing 100K is bare minimum, which we're going to see, and moving more towards 130 plus. But at the same time, I think the overall market with upcoming IPOs, most probably BitGo IPOs by the end of the month or somewhere next month, we're going to see a little bit push in the overall crypto market. So I'm crossing my finger for even ETH crossing 4K again.
Finally, Kavita, when we think of Bitcoin, of course, is a volatile asset. Is it as volatile as it used to be, Kavita?
No. And that's why we say like Bitcoin is moving more towards a gold like a digital asset, because the volatility is not that much. It is becoming much more safer. It is becoming a much more, it has already become a huge institutional adopted currency and an asset. And I think because of those reasons of long-term holding, it is not that volatile, which we are still seeing in bunch of really good tech altcoins, which I think it will take time. Similar thing which we saw with Ethereum. It did not move. The volatility wasn't there like 30% or 40%. It moved within its 10 to 12% zone.
Kavita, always good to see you. Thank you.
Thank you.
Coming up, President Trump unveiling a proposal to lower healthcare costs. We get a health industry CEO's take on the plan. That's next on Market Domination Overtime. Healthcare is in focus this week in Washington, and it all comes down to the top issue facing Americans, affordability. President Trump laying out broad proposals Thursday calling for drug prices and insurance premiums to come down, and he's putting the pressure on Congress to take action. Joining me now is Owen Tripp, Included Health CEO. Owen, it is great to see you. Maybe start big picture on healthcare costs, Owen, because Mark Cuban, he's been talking about that issue this week, making headlines. What do you think, Owen, maybe a lot of people might misunderstand about why healthcare costs as much as it does? I mean, is it a policy issue, Owen? Is it a market issue? Is it wrong incentives? How do you frame it?
Can I go with all of the above, Josh? So I think the major issue really is that we have an amazing system that very few of us are actually trained on how to use. We need advocacy and decision support on where to go next when we go there. We understand what going to the doctor or the pharmacy looks like, but we don't always understand how to make decisions and then most effectively get to high quality care. When we do that, we save the waste in the system. We have the American healthcare system performing at its absolute best, and we can afford it as a country. Unfortunately, I don't think we're there right now.
What about the role of drug prices, Owen? I mean, as you know, that's often that's kind of singled out as the villain in this story. Is that fair? Is that accurate?
It's fair, but we have to have two really independent but linked opinions on this. One, we have the abilities in this country to do amazing scientific discovery and create drugs that are so effective for their targets. But at the same time, the pricing mechanisms really work against us, and especially in the companies that we help support, the largest Fortune 500 companies like JP Morgan, Walmart, Citigroup, others. The problem becomes the drugs are actually priced at the very top end of their range to the commercial purchasers of those drugs. And unfortunately, those of us who are buying them don't experience very good prices in that process.
So how do I guess, Owen, if I could put you in charge, what are the smart answers here? If we want to cut costs, but we want to also improve outcomes, what's the strategy? What's the game plan?
All right, let's start with great primary care. And I'm talking about that classic, deeply qualified, empathetic person who understands you end to end and can direct and quarterback all your care. And here I mean mind, body, and wallet. So help you with behavioral health, primary care, linkage to specialty care, saving money on those drugs and getting the most out of your benefits. That would be step one. Step two is I would eliminate fraud, waste, and abuse associated with care that's ineffectual, low quality, repeated, and inappropriate. We do those two things, Josh. We are well on our way to having a very sustainable, very high quality, and very effective system.
Let me ask you also, Owen, I'm curious about GLP-1s, because that's an issue. I know you've thought a lot about it, you've written a lot about it. Should we be expanding access to those drugs, Owen, beyond the FDA-approved uses?
I'm a GLP-1 fan. I think these are highly effective drugs. The side effects are not negligible, but things that can generally be managed in a longitudinal care situation. And that's really where I dig in. We have to make sure that every time we prescribe these things, that we're doing it in a way that we can take care of that patient, mind, body, and wallet across the entire continuum. They're very expensive drugs. They're going to continue to be expensive drugs, even as prices come down a little bit. But we need to make sure that that person has a plan for their diet, a plan for their exercise, in addition to the drug itself.
What about AI, Owen? I want your thoughts there. Already being integrated into healthcare. What, in your opinion, you're on the front lines here, what does AI, when it comes to healthcare, do well, Owen, and maybe not so well?
Yeah, so Josh, as you know, I'm a technologist by training. I've spent my entire career building apps and systems that people love and use every single day. And the thing I love most about this moment is healthcare is not a laggard on AI. We are leaning into ways to making AI work so that the member can understand his or her own needs, what they can afford, to be responsive day and night, to personalize that context, to get answers in any naturally spoken language that occurs around the world. I'm very optimistic that AI is not only going to meet the administrative cost requirement of healthcare, but indeed meet the member requirement in healthcare, making sure that we deliver that really effective special care we were just talking about a minute ago.
And I know your company, Owen, it recently launched its own AI personal health assistant. Walk me through that.
Yeah, so at Included Health, we put the member first. We want to make sure that if you or somebody you care about has a question day or night, that we can answer that question, again, going across the things that are necessary for your medical care, that are important to your physical safety and care, but also in the context of what you can afford. And our users, the millions of people who count on us for high quality care every single day, what they tell us is this is groundbreaking. For the first time, they can get expert advice, but that expert advice also is in the context of what their benefits plans will allow them to afford. We really think this is the future of integrated healthcare, and we're really excited about DOT, which is our AI agent that we announced publicly recently.
And when you launched that, Owen, I'm sure you thought about this, just in broad strokes. How should we at the same time, listen, there's great opportunity with that tech, but what are some of the risks we need to think about, before deploying consumer health AI?
Yeah, and this is what I would tell all your viewers. I would tell you, we have to be really careful which AI we're telling what. There is a real privacy question that I don't think has emerged fully yet about data that we're sharing with these AIs that can then be used in a number of ways that we haven't permitted the AI to do. When we go on the open LLMs today and we input a bunch of information about our symptoms, our medical history, our worries, our concerns, our DNA results, our lab results, we are giving that LLM permission to use that data wherever they want and for whatever they want. I would really encourage people to be careful to read those terms of service and to make sure that any data that they wouldn't ultimately want to be used in the public domain is not entered in there without understanding it first. At Included Health, our whole focus is on the member, as I said. So anytime you're giving us information that is your proprietary medical information, it isn't shared with anybody outside of Included Health. It is used to deliver better care for you.
And finally, Owen, I have to ask, any interest in testing the public markets this year, Owen, an IPO?
Well, the waters are looking better than, if you and I were catching up this time last year, I would have said, man, those are some chilly waters out there. We've loved the success of some of the companies that in our space. And I think there's a growing consensus that there needs to be more technology-enabled healthcare services companies out there to challenge the status quo and do great things. Included Health is already a really big business today. We want to make sure that we use capital most efficiently as we go along. But no news to share today on your program, but I hope you'll have me back and we can talk about it again.
We sure will. Oh, and it was great to have you on the show today. Thank you, sir.
Really good to see you.
Time now for to watch Friday, January 16th. It has been a busy week for banks with all the major institutions reporting quarterly earnings. Now we'll be hearing from some regional banks to finish off the week, including PNC. Analysts expecting the bank to make less profit before credit costs in Q4, driven by rising expenses. And it's been a mixed picture from financials. Lackluster reports from JP Morgan, Wells Fargo, Citigroup, and Bank of America weighing on investors earlier in the week. But it was a different story Thursday with Morgan Stanley and Goldman Sachs shares closing the day higher after reporting better than expected fourth quarter earnings. And taking a look at the Federal Reserve, another round of commentary from Fed officials coming our way on Friday as the legal threat against Chair Jerome Powell remains front and center. Fed Governor Michael Barr telling Yahoo Finance's Jennifer Schonberger that the Justice Department's criminal inquiry and the White House's accusations against Fed Governor Lisa Cook amount to, quote, an assault on the independence of the Fed. On the data front, we'll be getting some insight into home builders with the confidence index for January. Economists forecasting that number to rise compared to the previous month to 40, signaling slightly less pessimism in the housing market. Well, that's going to do it for today's Market Domination Overtime, but don't go anywhere. On the other side of the break, it's asking for a trend, and I've got you covered for the next half hour with the latest and greatest market moving stories.